I think that one of the reasons that you had this big selling in gold and silver when gold was above 5,500 and silver was 120, I think the government may have orchestrated that because they were worried about the message that soaring gold prices were sending. It really was a vote of no confidence in the U.S. economy, in the Fed, in the treasury, and the dollar. And, the stronger gold gets, the weaker the dollar looks in comparison to gold. Gold is the primary competitor for the dollar, not the euro or the yen or the RMB. It's gold. And gold prices just going up like this is a bad sign. And, the government, obviously, rather than addressing the problems that are causing the price of gold to go up, they would rather, stop the price from going up or try to deflect people's attention to it, because they're never going to get to the underlying problems until they have no choice, because there's a complete economic, crisis, which fortunately or unfortunately, depending on your perspective, is going to happen. So we're going to have the crisis. Whether or not we do the right thing is anyone's guess. But
are you expecting the
only way we're going to do the right thing is if a crisis forces us to do it.
Are you expecting the crisis to begin hitting this year?
It could, it could hit this year. It could hit next year. I don't know. It's been long overdue, but I think the action in gold is signaling that we could be a lot closer now, finally. And I think, what has happened, not just under Biden, but in particular under Trump, I think is accelerating a long overdue move out of the dollar. I think we really gave foreigners a kick in the ass to get them to do what they should have already done, which is ditch the dollar, move away from the dollar. And I think, Donald Trump appreciates how bad that's going to be. But given that, I don't know why he poked, so many bears with all this. The world is taking advantage of us. The world is screwing us over, when that's not what's happening. The world has been subsidizing the U.S. economy. They supply us with goods that we don't produce. They loan us money we don't save. Our entire consumer-based, debt-fueled economy is completely dependent on the world financing it. And if they stop doing that, which they should have stopped a long time ago, because it's not in their interest to continue this, but the sooner they stop, the sooner our whole phony economy implodes, which in the long run is a good thing, because, it's going to implode eventually. And the longer we delay it, the worse it's going to be. So, better now than later. But nobody is prepared for this. Nobody expects this. Nobody understands that this is what's coming.
All right, Peter, let's move over to silver. It's under tremendous supply strain after 5 years of a deficit and the increase in demand from everywhere you look. It's under tremendous pressure from paper games, as you were talking about, being played by very large players. So there's a lot of volatility. And the last month has been incredible to watch. It's whipsawing many investors. But what's your base case for silver for 2026?
Yeah, look, we're still seeing silver, swing, drop $10 in 5 minutes. But the important thing is, where is all that volatility taking place? $80, $85, $90 down to $70, $75, way above what used to be resistance at 50. So we just blew through the double top area. And so this is just a lot of volatility now that silver has finally broken out of this decades-long slumber. And there is some supply now because, Americans are broke. And so they're going down to the pawn shop with their silverware and their candlesticks and, whatever they got that's made of silver. And they're getting decent money out of it, right? But once that supply is exhausted, right, not everybody is going to go sell their family heirlooms. Some people are going to hold on to it so they can continue to pass it on to future generations. But there are some Americans that are in a lot of trouble. And if they can get 25, 50 grand by selling their fancy silverware that they hardly ever use. That's what they're going to do. I mean, I remember when I got married the first time and silver was under $5. And I was, this a great time to get silver because I knew like, hey, this, I mean, it's made of silver and it's only $5 an ounce. And it's not a bad, a lot of people have made more on their silver wear than on their stock portfolios now. But, we're going to run out of that, that bit of supply, which is minimal in the scheme of things. And I mean, the thing about silver is when price goes way up, it's not like the mines could just supply a bunch more silver. It's different in, let's say, in agriculture. If all of a sudden there's a lot of demand for soybeans and soybean prices go way up, farmers could just plant soybeans instead of corn or instead of wheat, right? They can start focusing on supplying more of the commodity that has higher price. But with silver, I mean, yes, if silver is really high, it will result in companies spending more money in, exploration and development projects to try to find the silver. But that's going to take a long time to even happen. So the extra supply that we may get in response to the higher prices could be 5-10 years into the future. So
much longer.
The only way that the market's going to clear is with higher prices. That's it. And that's going to reduce demand. But the problem is, as higher prices reduce industrial demand, they actually increase investor demand. Like investors want to buy more as the price goes up. So it's really going to be a problem. And obviously for companies that really need silver, they're going to have to buy it. But in some cases, they might say, well, let's use copper. Well, okay. Well, copper's at record highs too, and copper prices. I mean, no matter what metal you want to substitute down to, the price is going to go up and the supply problems are the same.
Exactly.
We don't have any new copper mines that we could just tap into.
Do you view the miners currently as fairly valued or undervalued?
Well, I think they're still undervalued. I mean, ironically, they're more undervalued now than they were a year ago before they tripled. Because a year ago, I still thought they were cheap. But I anticipated that the gold prices would go way up. The reason investors didn't want to buy them is because they didn't share that opinion. Most people a year ago thought gold was going down. In fact, I remember when gold first hit 2000, you had a lot of the Wall Street firms put sells on Newmont and Barrick because they said, well, gold's at 2000. It's got no place to go. It's at the top. And the whole way up, the analysts just never believed in the rally. So they never adjusted their earnings estimates. And so stocks are valued based on the discounted future earnings to today. And if you don't believe they're going to have high earnings in the future because you think gold and silver prices are going to crash, then you're not paying up for these stocks. But right now, I still think that many people are in disbelief of the current prices. They still expect gold and silver prices to drop, but maybe they don't think they're going to drop enough so that now they're comfortable. Okay, maybe gold goes to 3,500, right? So that's still like they still have to up their estimates, right? But I think not only is the street wrong to assume that gold and silver prices are going to go down, I think they're also wrong in not assuming that they're going to keep going up, because everything that they didn't expect, which has driven gold from 2,000 to 5,000, that's not going away. And silver finally broke out. And, a lot of these gold companies, I mean, pretty much all of them mine silver. But where silver comes into the earnings is it reduces the cost of the gold. And so I think what's going to happen is you're going to see companies not only with a higher top line in their revenue, but their costs are going to go down because they're getting so much money for the silver, which is a byproduct.